as usual, the disclaimer that this is all for educational purposes only. Whatever we do here is, while for the express purpose of making money, this is to teach you guys how to make money. Capital discussions, nor I myself are none of us are broker dealers, and you have to make sure that you follow your own risk management and money management principles in investing your own money in trading options, especially in your IRA, which from what I hear, we might not be able to do anytime soon. There is talk about option privileges being taken away completely from IRA accounts. So hopefully that will not happen, but a lot of us got this email from TD Ameritrade. I don't know whether you guys got it from whatever other brokers that you have or not, but by all means, go ahead, talk to your congressman, senator, and make sure it doesn't happen, because this is the only way we know how to make money, trading options. All right, so here is the trade. This is Goldman Sachs. We are up by 18.987%. We started out with a total margin of 2,138. For those of you who don't know why we only use this much, is because that we imagine that we have a $25,000 account. So we try to never use more than 10% of the entire account in one trade, in a debit trade. And since 20% of 2,500-ish, which is about $500, that would be our max loss. Our max loss would be within literally 2% of our account, should we encounter a max loss, which so far we haven't in any of our income trades. So this was a trade that, as you can see, began 105 days ago, okay? We started this trade as a June-October trade. And we started it at 205. So we literally, Goldman was at somewhere over here. So we did a 205, then we went to 210, we also went to 215 as Goldman kept on going up. And then as it kept on going down, we took off the top calendars off and added more at the bottom. And essentially now we are at 195 and 185, and currently the Goldman is at 186.68, which is right between our two strikes. Just as a side note, for those of you who are not really into calendars, throughout the entire trade, our delta was literally positive. On Black Monday, which was last Monday, when the VIX made its largest one-day move in the history of the VIX itself, our delta was still positive. And we did not, our P&L may have gone down a little bit. I think it went down from like 18 to 13%, but now it's coming back up again. So we didn't do anything. We just, somebody's asking, has the event started? I don't receive any sound. I was actually going to tell him verbally that yes, it has begun, but he can't hear me. So I'm just going to type and say, yes, it has begun. So I will say you might want to log off and log back in. So there is at least one guy who can't hear me. I'm assuming that most of you can. I know Randy can. All right. So at this point in time, this is where we are. Now, as you can also see, we started with a total margin of $2,138. And as we kept on rolling, we started to recover some of that money back. And right now, our current margin is only $291.50, down below here. Which means that if today Goldman were to go down to $0, or if it was to go down to $2,000, we would lose $291.50. That's it. and one more roll, and we probably won't even do that. In fact, today is Thursday, and coming up, which is Friday, is when we roll. Sometimes we roll on a Monday. If we were to roll this, we are getting a significant amount of credit from 224 to 342. That's almost $1.20. And then from 8.52 to 9.32, which is another 50 and 30, 80 cents. So if you do this, our margin goes down to $98, which means that after we do this roll, anything that happens to Goldman, the worst thing that can happen to us is a loss of $99. And then one more roll and we are done. Remember, this trade goes all the way to October. Now, one of the other things that we also do here, okay, Randy is saying, please select all participants from the send to box. Randy, is that for me or for the gentleman, Mark? Oh, for everyone else, okay. Yeah, that's a good idea. If you have any questions, don't just send it to me, send it to all participants. Actually, if you have questions, I would appreciate it if you just unmute yourself and ask it verbally. That would be so much better. Then I can actually probably make more sense. It's a pain in the neck trying to type a lot of these things in a little chat box, should you have any questions. So now my next question is, do any of you have any questions about whatever I have said so far? One other thing that I was about to say is that one thing that we have decided is to have what is called literally perpetual calendars. In other words, if the price is between 185 and 195, let's say, how many days do we have? 43 more days before this trade expires completely. So in about 15, maybe 20 days, once I get into the first week of October, in other words, when we roll and we are about to start coming into the very first week of October, I will, and if we are still within our 2 strikes, what I will do is that I will roll the October longs all the way to December or maybe in January, depending on, okay, there is no December yet. But who knows, by the time we reach the first week of October, it is very possible that December may have shown up here. And I will roll this forward to January or December, and we will just continue the trade. Does that answer your question, Larry? And of course, for those of you who have not put this trade on, should you want to put this trade on, at that point in time, you can literally start a new trade starting with the first week of October and the longs in either December or January. Make sense? That's somebody got a question? Okay. Somebody was whispering. I hope there is no something bad happening out there. Okay. So this is our Goldman trade. We have another trade, which is IBM. And here also we are essentially at around 19.84% in only 41 days. Obviously, like everything else, this thing also went down significantly and came back up significantly. But more or less, we were throughout delta neutral or slightly positive. Right now it is -2. I would call it more or less neutral. But of course, as soon as we adjust, we will come back to a positive stance because I personally prefer my deltas to be positive. Because on the downside, my Vega will help me. Again, in this case, we started this trade all the way at 160, and then we rolled down, we added the 155, we added the 150, we got out of 160, we got out of And now, we just kept on literally making sure that the marble remains between 2 or 3 of our strikes. By the way, in Goldman, we only have 1 contract, but we literally had 2 when we started out, and we took 1 off. So we have already taken some profits over there. Over here, we have not taken any profits. Well, actually, we have when we took off the 160 put calendar. So we took some profits. And then we had quite a few rolls since, this last 41 days, obviously we had at least 6 rolls. 5 maybe. The 6th one is coming up. So those rolls have brought our total margin down from 1351 down to 607. And a couple more rolls, we will be down to 0, and then we don't give a damn what IBM does. It can go down to 0, it can go down to 2,000 or more, and we won't lose anything at all. So before I show anything else, any other questions? I don't know.
Yeah, I have a couple questions. Can you hear me?
Sure.
Does your P&L reflect commissions?
Yes, commissions are included in the overall P&L that you see in here.
Okay. And then, like for new subscribers, were you saying every time you do a roll, it would be okay for like new subscribers to put on trades, or did I understand that correctly or incorrectly?
No, that is correct. No, when I roll my longs, so when in this case also we have October. So in another, let's say, less than by the end of September. By the end of September, we will probably be rolling these longs from October to December. And at that point in time, if you haven't got this trade on right now, then you can start a new trade, and the adjustments will be identical, meaning whatever adjustments I send out will apply to you as well.
Okay, so it's a roll of the longs, not the shorts, right?
Well, I will tell you which shorts to put on as well, because we will be doing them both simultaneously. When we roll these longs to December, we will be rolling some of the shorts to the next week, but since you don't have any shorts, you will just start by selling out the shorts in the week that I mentioned in the alert. Make sense?
Yeah, it does. So do you ever move out of the calendar into a diagonal?
Oh yeah, many times. We will adjust our deltas. If our deltas go seriously negative and the market is moving up, then we will convert something. We may do something like roll it up like this and get our delta positive and have a 142 short put, but a 140 long put in October. Oh, sorry, 150 long put in October. Actually, we have both 140 and 150, right? So this becomes a diagonal on the downside. The top side remains as a calendar. On the other hand, if the market or IBM in this particular case were to go down instead of up big time, then as this goes down, our deltas will turn positive. And in order to bring the deltas, more neutral or slightly less positive, then we will roll the top calendar slightly early in order to bring the deltas down a little bit more. We can't really convert this into a diagonal because it will actually bring our deltas up slightly. Or maybe not. Who knows? If we were to do that, 2 and minus 2. See, our delta goes up big time. Because remember, the top calendar is a put calendar, not a call calendar. Usually what we do is we start with a single calendar and convert it into a double calendar. But given the situation, or not the situation per se, given the market, the way it is behaving, this is the time when I probably start with double calendars, or maybe even a triple. So if we do start with a double, then we will, let's say, if IBM is at 150, we may start with a 155 above, a call calendar, and a 145 put calendar. That way, That way, should we need to convert a calendar into a diagonal on either side, we can do that. But remember, when we convert a calendar into a diagonal, your margin will increase because now there is a spread between the long and the short. So, I mean, it's okay if you have enough money in your account. I mean, even here it's okay because we are only going with 2 or 3 contracts most of the times. But yeah, that essentially should answer your question.
It does. Thank you. So it looks like you're managing based on delta and keeping the market under the tent, and not necessarily on gamma or vega or anything else. Is that a correct assumption?
Yes, because again, we don't really have to worry about the vega because we know that the vega will always be positive. In fact, that is one of the criteria for this trade.
Right.
I want vega to be always positive. I want my theta to be positive. Gamma will hurt us, but if we adjust properly, then it really won't matter much. So essentially, yes, we are making sure that our deltas are only slightly negative or a little bit more than slightly positive.
So the gamma,
keep this T plus 0 line sloping slightly to the upside most of the time.
So the gamma is what the gamma is. You're just rolling so that you have at least 7 days DTE on your shorts?
Correct. Sometimes we go to Monday morning of the week of expiration, but usually I prefer the Friday because, you know, we don't want all this some shit happening over the weekend and then another Black Monday coming, even though we know that you know, I mean, literally, we have a trade here that if IBM were to drop down all the way to 136, which is 11 points, which it usually does only after after earnings, it will go down by $10 or go up by $10, and then retrace back by 50% by the end of the day. That's what it has been doing for the last 5 years.
Yeah.
So,
okay,
yeah,
that's very helpful. Thank you.
Sorry?
I said that's very helpful. Thank you.
No problems. And Tom has a question. Tom N. Is this D Tom N? If bullish, you start with a call calendar and vice versa. If bearish on the underlying. Not really. This is an income trade, so we are not concerned with whether we are bullish or bearish. So, but I mean, of course, you know, one always has a slight bias one way or the other. I know I always do. I can't say that I am totally delta neutral or market neutral. We can see the damn thing either dropping like a rock or shooting up like a rocket. And sometimes literally doing neither of those two and just sitting there. So our goal here is to be covered on both sides. So by default, as I just said, since I want my delta to be positive, you would say that I'm slightly bullish. But since my vega is also always positive, you can say that I'm slightly bearish as well. So, you know, that sort of makes up for my being more or less delta neutral. So a lot of times during normal markets, what we do is we just start with an at-the-money calendar. And at-the-money calendar literally could either be a call calendar or a put calendar. It is still considered a neutral calendar. In fact, I'll show you, like right now, if the price is at 147, if I were to say start a new trade in IBM and I say buy the 147 call calendar, 147, let's say go all the way to where? Oh, there is nothing for weeklies, so we will just go to October 147, and I'll say 1. As you can see, my delta is minus 0.03. You see that? I'm right in the middle of the 10. But instead of a put side, let's suppose that I decide to do it on a call side. So if I say 1 here, and I go to, say, minus 1 here. Oh, sorry, I should say new. As you can see, my delta is identical. So is my gamma, my theta, and vega. So it doesn't matter whether it's a call calendar or a put calendar. What you really need to remember is that it doesn't, as I said, it doesn't matter whether it's a call or a put calendar. As long as the underlying moves in the direction of your calendar, that calendar will make money. So if you have two calendars, one slightly above and one slightly below, we are okay. If it moves towards the upper calendar, then that calendar will make money and the lower calendar will lose slightly. If it goes down, the opposite will happen. But in the long run, because of the rolls, we end up making money anyway. So Joe has a question. What is it? This is an income calendar, correct? How is this different from a wealth calendar? The wealth calendar will be something like this. Let's just suppose that for the sake of argument, we are putting on a wealth calendar in IBM. Then what I will do is this. Now in a wealth calendar, by default, there is slightly more bias. You know, as we know, since the year 1900, the stock market on the whole has always kept on moving up. There are certain down days, occasionally a couple of down years, but on the whole, it keeps on moving up. So for a wealth calendar, what I would do is something like this. I would assume, or I would think, or I would look at my technicals and say, okay, this is way down here. It's almost at the lower Bollinger Band, so chances are it'll move back up. Maybe to the middle of the band, which is around 150. So then I can actually put on a trade with something like this. I would sell the November. The November is actually too far out, 78 days out, but I would usually go about 60 days out. I would sell the November and maybe buy the January in this case, or maybe even April. So then this would be my wealth calendar where, I'm spending $3,520. And of course, here also we are looking for, at 10%, we scale off, take 2 contracts off. At 15%, take 2 more off. At 20%, take 2 more off, or maybe 3 more off. And then just try to keep on rolling, reducing the margin. Now, this is a trade which is much more resilient, even though, the delta is significantly more positive, but so is the vega. So if it moves up, we are okay. If it moves down, we are okay. Our theta is more or less the same as the previous one, and so is our gamma. So, and of course, the adjustments will differ slightly. We can actually take a slightly more, we can let this go down to like almost maybe 10 to 12% before we adjust, should it go down. If it moves up, we know we'll make money all the way until here, to 155. We don't have to do anything. And then, of course, we have our adjustments where should we, like literally, if tomorrow IBM were to go down from 147 down to, say, 140, which is very possible, then we would take half of these 10 contracts off. In other words, this 10 contract calendar would now become only a 5 contract calendar. And if it goes to 140, since our break even is at say 139, which is more or less 140, I would go down to something like 135 and add those other 5 calendars that we just took off for a slight loss and put it down here and bring my deltas back to normal. Because remember, if IBM does go down to 140, this delta will be like way out there. Our delta will be 88. So we need to bring it down, especially since the damn thing is moving down. So we take half off here. That brings our delta down by half. 88 will become 44. And then we add something at 135 or maybe even at 130. Then it will bring our delta back down to, say, 20 or 30. But because we have 78 days or 60 days before we really get hurt on this, now remember, if the price goes down, this $5.05 that we spent, that we took in as credit is also going down. We can buy this back for like $2. Or we can then roll this down over here and thereby bringing our delta down as well. So because we have, unlike a iron butterfly where we have 4 strikes but the same expiration, here we have 4 strikes but 2 different expirations. So if you do your permutations and combinations, we have at least 2-3 more ways of adjusting our calendars. And we can do many other things, like convert it into a diagonal, convert part of it into a diagonal, keep half of them as calendars uh, on either side or both sides, depending on how we want our, because as time goes by and we come closer to our expiration here, we want our theta to increase and recoup some of the losses that we may have taken until then. So does that answer your question? Wealth, with the difference between income and wealth. So here's another question. Avi, hi Avi. For income trades, how many days out do you start with for short and long? I will start out still about 30 days out for the income trades. So for the first 30 days, it'll be like a regular calendar, so to speak, maybe 30 to 40 days, depending on market conditions. I will never start a trade 8 days from expiration. Because can you imagine what would have happened if we start a trade, let's say on Friday? I prefer to start calendars on Fridays because the market makers suck the walls out. So it's a pretty low wall environment on Fridays, except for the Friday before last where we got killed. So by the same token, had we started it on the Friday before Black Monday and we were 8 days to expiration, this down drop, we would just have said, you know what? I just took my max loss, I'm done. So having a little bit of time in the beginning of the trade is actually good because, we would think that the way the market has been behaving since, last Thursday to, say, Tuesday or Wednesday won't continue for a significant amount of time. I mean, it could. It happened in 2008. But again, bottom line, we have a plan. We know what to do, when to do it, how to do it, and all we have to do is just keep on doing. So to answer your question properly, for income trades, I will start out with days to expiration, so my short calls and puts will be anywhere from 42 to 30 days out. But my longs will be anywhere from 2 to 4 months beyond my shorts. So we get more Vega for, it's more bang for the buck kind of situation as far as Vega itself is concerned. And the further out you go, as we know, weighted Vega doesn't influence us. It's real Vega. So then it's literally like having a strangle 4 months out on IBM or SPX or the RUT. So if the market really makes a huge up or down move, you are covered. All you have to do is get out of the short put if it moves down big time. Now your delta is negative, your theta is still positive, your Vega is seriously positive, and then after 2-3 days when the market starts moving the other way, sell it back. So the next question is from Patrick.
Reliable because it would be in trade station or
the kids and the adults suffer.
That's right. So
okay, that wasn't for me. So here's a question from Patrick about you are gamma short and Vega long. So in case of a backwardation or a drop in vol, it will cost dollars. Not necessarily. Because what will happen is that the short calls and puts will still help you anyway.
Meeting in commissions that is traders, and Andrew's technique is pretty powerful, so I will do that.
do.
Unless you think it's
Oh, okay. That's Andrew talking to somebody else. Okay. Does that answer your question? Who is it? Patrick? Yeah, does that answer your question? See, by default, your gamma will always be negative on any income trade. It doesn't matter what income trade you do, your gamma will always be negative. Your goal is to keep it as less negative as possible. Even if you do, the John Locke trades like N3 or something, your gamma may be, minus 0.02, but it is still minus. Now, While I agree with you that gamma will hurt you in certain ways, what happens is that the gamma will hurt you more when you have a very low price stock. So for example, if we were doing the same calendar or a double calendar on, say, Ford Motor Company, then your gamma will be like 3 times this much. GM, same thing. Microsoft, same thing. But the higher the price of the stock, the less gamma it is. But compared to iron butterflies, because we are in 2 separate expirations, your gamma will always be higher. Unless, for example, if instead of IBM, let's say this was SPX, okay? Now what happens in SPX? If we have an October-November trade in here, we have already adjusted, but I have not inputted the data in here yet, or imported the data. But so let me just show you here. So if we were to go to, say, something like SPX or the RUT, and we were to go to, come on, let's say let's just go with the same trade. 78 days out, it's 1960. Let's say I decide that I'm going to go to 1980. Yeah. So if I sell to here and then go to here, we will obviously just do a November-December trade. We could do a November-January trade, but then the debit will be significant. So in this case, our trade is going to look like this. And look at our gamma, minus 0.06. So the higher the price of the underlying, the lesser the gamma. Or the higher ATR that an underlying has. Like for example, if we were to go to, say, Tesla, right? Tesla is a trade where even if you are 30 days out, your gamma is actually not that high, which is very, very weird. A lot of people, even I was like very surprised. But so let's say it's at 249, say 250. I think it's going to go up over the next, say, 43 days. So I go to 260, and I say 10 contracts here and 10 over here. And even though I'm only 43 days out, look at my gamma. It's only minus 3.8 as opposed to, what was it in the other one? 8.9 something? For IBM, it was 8.9. And these are more or less what IBM is $100 less than this. But I can live with it. I mean, if my gamma, I remember doing long-term trades in, for those of you who don't know about it, we have something called the stock replacement strategy, where we buy leaps in something that we think, for example, if I thought that Tesla was going to go to the moon, or at least halfway there, then what I would do is I would actually buy something like 500 days away. And I would look at Tesla and say, what was the previous high, which is all the way at 275. So I would buy a call all the way at, say, 270, which would cost me $45. I may buy only like 2. But now, what I will do is I will start selling against it. See, even now, 15 days out, 275, which is almost 26 points away, is $1.30. This is only 15 days away, but look at my gamma. It's only minus 1.41. So so in calendars, the one thing that I found out in calendar, I don't know if you guys know this, for those of you who are iron butterfly traders, try to put on an iron butterfly 30 days out in Microsoft. You will be amazed, not amazed, I should say. The opposite of amazed is shocked at the gamma that you will see on an iron butterfly in IBM. Here, let me show you. Most people think that gamma is a big thing only when we are trading calendars. But let's say if I have Microsoft, and this is an income trade, I think Microsoft is going to remain like, between, say, 44, around 44, 45, and no more. So I can go to, say, 36 days out. I'm at 43.5. I think it's moving up right now, so I will just settle down at, say, 44, and I say minus 20, because this is going to cost you like 10 cents at the most. And I go up by, say, 4 points, and then I go down by 4 points. Look at my gamma, minus 99. But if you do the same thing in SPX, your gamma will be like minus 1, maybe less. So it actually depends on the underlying. We tend to think, or we were taught by, or at least we reached that conclusion ourselves, that a strategy should work identically with all underlyings in the same way. That is a misconception, and it took me a lot of money, I should say, before I realized that a butterfly in Microsoft is going to work differently than a butterfly in Tesla or IBM or Google. And the same thing with the calendar, a butterfly in SPX. But can you see in IBM, if you were to put a trade on, now see, as you can see the gamma, this is a butterfly, a regular classic butterfly at the money, and the gamma is minus 104. But if I were to put on a calendar, right, let's say I were to go to 44 and I say minus 20, sorry, minus 10, that was 10 butterflies that we had on, and then I go to, say, December, and I say plus 10. See, my gamma is half that of a butterfly. Interesting, isn't it?
It's fascinating. Why is that?
Because the gamma, as I just said, the underlying stock is
Because of the price?
Is because of the price of the underlying stock and the way it moves. Like the same, probably mainly the price itself, because we know that Microsoft is a $48 stock, $43 stock, and Tesla was $249, literally like $200 more. So, and as I just said, if you were to go with, say, GM or GE or Ford Motor Company or something like that, the gamma would be even higher. And we have a couple of trades. In fact, is Marcy here or not? I was hoping she would be here. Marcy is one of my subscribers, and she's a nurse, so she has to work on different shifts. So there are times when she cannot adjust. So she has decided to take mostly the trades that are monthly trades. So in fact, while I was showing, some of you guys have seen this, we have not a long-term trade, but a triple calendar trade in Lockheed Martin, which we have been doing for a very long time. So even though I didn't send this out to my subscribers, she saw this during one of these Thursday meetings, and she put it on, and she's up by 42%. In fact, she sent me an email late last night saying, do you think I should just roll and keep it here, or should I just get the hell out? She only did it with one contract because she's still learning, and I said, hey, if you only have one contract, you made 42% in like 37 days or something like this, by all means, get the hell out and spend some time in a church or a temple giving thanks. And she So these were some of our other trades. Some of you have seen these trades. Some of you who meet up with me regularly on Thursdays. And some other trades that we were seeing here was this trade in the rut, where we actually put this trade and we actually said during high wall. We literally named the trade during high wall, and we placed the trade on what day? On 8/6. So on August the 6th. This is August the 20th. This is August 6th. By this time, on this day, the rut had already come all the way from close to 1,300 down to 1,215. It's down by 85 points. The VIX was already up at around 2021, and we were like, let's put this trade on. I want to show you guys how this trade can make us money. And we started with a margin of 15,820. Now it is down to 4,385. And we are more or less right in the middle of this tent. We have something on the upside or the downside. We have a call. No, we have all puts. Okay, where is the damn third put? Okay, here we go. So we have a calendar at 1200, 1170, and 1140. And the run did go below 1140. We know that. But we were still okay because we had already made so much money and our Vega was still helping us. The Vega may not really be 292, but it is at least 29. And that plus 29 will help me whenever the market drops like a rock. And obviously we know, like, the VIX was up. The highest ever move in the VIX on Black Monday. I mean, and we were just sitting here not doing anything. We were just watching this thing and saying, wow, this thing really works. Same thing with our Tesla trade. For those of you who actually come to the Tuesday's Trading Group 7 meeting, we have a Tesla calendar over there. And okay, so here we are in Tesla. We have a triple calendar here as well. Is it down here or up above? Oh, we have a call calendar up here. That is. So we have a 265, a 247.5, and 230. Tesla did come all the way down. But at this point in time, and we actually added one more. I think we added something very recently, which is why our margin is 27.29 as opposed to negative. Yeah, 9.1. Oh no, we just rolled here. We must have added something. Well, it doesn't matter. We are still within our overall max margin. We are reducing it peacefully. And this is a September-December trade. We have been in this trade for 56 days. We are up by 71.32% in this trade. And we have Lord knows how many rolls still left. And we have so many trades, I don't even know what, Dan, do you remember what other trades we have? Avi, Paul, Apple was one, I believe. Okay, here's Apple, 21 days, 38.8%. We have the 115 put calendar, and I don't believe we have done anything with this trade at all. We placed this trade on 8/13 and on 8/17. It's still 115. Oh, we took half off. We had 10 contracts. We took half off, and now this other half is sitting there making us money. All right, let me have a look at some of the questions here. Brad H., very insightful on the differences. Yes, indeed. It took me a long time to figure that stuff out. James is asking, the short is at 43.5, not 44. What would the gamma be at 44? Presumably you're talking about Microsoft. The short was at 43.5. So if we were to do 44, and we go to, say, 36 days out, and we say minus 10, and we go to December and say plus 10, is 51.10. Well, yeah, last time it was 48 point something, so it went up by about 2.5, 3 points. Patrick is saying, sorry, I did not understand your answer. Okay, what was your question, by the way? Hold on, let me see. Your question was, I'm gamma short and Vega long. So in the case of a backwardation or a drop-off in the wall, it will cost dollars. It will cost dollars, but not as much as you think it will. Because remember, we have so many rolls. We have so many different ways of adjusting. And every adjustment, if you do it right, will actually net you a slight credit. So you are keeping on taking in money as things happen. Like, for example, in this particular trade, let's say we have a trade here, which is, as you just said, is in backwardation, and certainly this thing goes through the roof, then I can just buy this back. Let's say if it goes through the roof, my $1.64 may go down to say maybe $1.20, or depending on how many days have gone by since today. Let's say 10, 20 days have gone by. This is down to say 90 cents. This 2.21 may be at now $1.90. So all I have to do is buy this back and sell this one or this one, and thereby take out the credit of 2, or say 190 minus 90, so another dollar is now in my brokerage account. And then I can move it down. Now look what I did here. I just increased my delta significantly. My vega went down a little bit. My gamma actually also went down a little bit from minus 51 to minus 43, and my theta is more or less the same. So given that we have many different ways of adjusting, and remember also, because we are a put trade here, this is a put calendar, and if something like Black Monday happens to Microsoft and Microsoft goes down by say 20%, you know, buy one back, buy one put back, or buy this, convert this diagonal back into a calendar and buy one put back. And suddenly your delta is now negative. All you did was buy one put or two puts. This will screw up your theta a little bit, but at least in the short run, if IBM keeps on falling, you are okay. You don't give a damn which way, how low IBM goes. Make sense? Did that help you understand a little bit? So yes, the cost in dollars will be temporary, because I will recover some of those dollars back by some of these adjustments. I will recover some of these dollars back through all the rolls that I'm doing. I will essentially, because I have so much time, I have all the way until December to recover whatever money I have lost. And chances are that I will recover most of the money that I have lost. So far, we always have. And if the market actually goes down, then I'm even happier than otherwise. I mean, usually, you know, calendars will get killed when the market moves up big time. Like yesterday's big day up normally would have hurt us. But because the market went down and we were significantly delta positive on our trades, we were okay. So I don't even know what other trades we have here. Amazon. Okay, here is Amazon, once again, 21 days. 500 put, 540 call. I don't even know whether we did it at the same time or at different times. We started with the 540 call. Amazon went down. 7 days later, we added the 500 put calendar. And this is where we are sitting right now. Today, it is down, meaning Amazon is down. Why is Amazon down? Everything else is up. Oh, no. This is nice. I love it. Maybe it'll go down. Maybe the day will be negative. And here, again, we have a plan, right? We know that when the stock, in this case Amazon, goes to somewhere over here, I will probably go down and add something at my current break-even of 479. This is 500. So 479 is 480. Maybe I will go to 470. And then, you know, chances of Amazon going down to zero are more or less nil. At least that's what I think. I could be totally wrong. Worse things than that have happened. So Patrick, I want to make sure you got what I said. And somebody saying mute and do so. Yes, I already did. When Wall is in the plus 50th percentile, do you change, hold on, that is not the, once you have substantially paid for your longs and essentially have on a strangle, will you ever scalp gamma? I have done that before, but I will, you know, if I have, say, 20 contracts, by the time I do my scalping, I may be down to only 2. You know, just to like sort of check it out and say, you know, even if this doesn't work out, I will lose maybe, you know, couple $100 out of whatever profits I have already made. In other words, it'll be more of a doing it for a lark as opposed to making significant amount of money on that gamma scale. On the other hand, if something like Black Monday happens and I have a strangle on, then I will be, spending some time in the nearest temple come Sunday. So once in a while, yeah, but it's not part of the strategy per se. So the next question is, this is also from Avi, when vol is in the plus 50th percentile, do you change the format of the strategy? Yes. When the vols are this high and the market has dropped like a rock, I will probably start, not probably, I will start my calendar with a slightly more positive delta than usual because I'm looking for a pop in some way, shape, or form. And the pop will come because even though the market has a whole like that, I don't know if you know this, but if you look at Black Monday, which was when? This was Black Monday. What was Black Monday? Let's see. The 31st, right? No, 31st was this week, the week prior to that. No, there were 24th. Tom is saying 24th. Yeah, 24th of August. So on the 24th of August, this is the 20th, this is a Monday. Look at IBM. IBM on this day went from a high of 512 down to a low of 494, which is 16 points. Now this is, up here is saying August 21st. Oh, this is Amazon, sorry. But okay, so Amazon went down so much and it was still not too bad, right? We are up by 17%. I'm glad somebody mentioned that. Okay, here we go. This is IBM, 24th. Okay, IBM was high of was 147.76 and the low was 142.32. So that is $5.40 some odd cents. So we know that even on really bad days, IBM and Google, and well, Google actually went down quite a bit, but I think that was more in reaction to its 130-point move after last earnings. But there are some, like for example, if you look at J&J probably went down by like 89 cents. So depending on the underlying, you would do other things. Now, I've been trading IBM since 2001, literally. There has not been any time, even when I'm on vacation, there have not been any time when I do not have IBM calendars on, literally. If I do not have IBM calendars on in my account, I have a hard time going to sleep. So because I have traded IBM for so long, it's like I know that even when it is like really bad weather, I'm not going to get hurt too much. I remember, this is nothing compared to what IBM did in November of 2008, when, literally, there was no end in sight. Everybody was just in a total panic mode. But it was still okay. Now, I agree with you that what happened in 2008 when the VIX was at 82, when the VIX literally went from 82 down to 35 within a span of 30 days, starting in February of 2009 to April, I got hurt based on my walls. Meaning the calendars got hurt, but I just kept on adding more calendars up above, so my delta was so significantly positive that all in all, I still managed to break even on that one trade. And then once the VIX was at about 30, I was okay. I was back to my regular triple calendars. Make sense? So yeah, reinforces the idea of trading a short list of products. I agree, Brad. There was a time when I was doing, when I found out that you can do these scans in Think or Swim, I would be scanning the entire universe of stocks, and there would be like, 800 candidates, and I'm like, which one am I going to trade? So, then finally settled on the indices, and then I have like very few of these underlyings that I trade. Amazon, Tesla, Goldman Sachs. We have a Goldman trade here as well. In fact, somebody on the forum had mentioned when we started this trade way back in March, and the Vega was like extremely high. somebody was wondering like how we would actually make money in this trade. I think our September is about to expire within 1 day, which is when it looks like this. Oh no, we are all over here. And look at this, we have put calendars and we only one put calendar and 2 call calendars. And we have the 200, the 195, and the 200 again here. So this is actually a diagonal to make my delta positive as it is moving up, and it's moving up. From 6,000, we are down to 2,540. We are up by 33.39%. I mean, in this particular case, we only have 2 contracts, but if you have 20 contracts, you keep on taking your profits, adding some more at other ends, rolling your longs further out, and just keep on. You can literally be in, I mean, I have been in the same IBM trade now for a pretty long time. The trade never ends. It just keeps on being, the longs get rolled further out, the shorts keep on getting rolled every week, and the trade just remains there and does its thing. So Patrick is asking, the gamma also depends on the level of volatility and the skew. That is correct. It certainly does. But even assuming all other things being equal, meaning if the walls are very high or the skew is totally skewed, whether there's backwardation or contango, you will find that a trade in Goldman Sachs or Tesla or SPX or the RUT will always, always, always have a significantly less gamma than a trade in Microsoft or GE or GM or Ford Motor Company or Teva. Somebody mentioned Teva. Yes, Teva as well. And, you know, eventually it's like, you know, you just live with it. It's like, I know it's there. I have a plan to take care of it. The plan has been tweaked over the last 15 years. It makes me money. I'm not going to change it based on, you know, whatever, whether it is backwardation or contango or whatever it is. And, you know, you just keep on doing the same thing until it gets so damn boring that you are like, why am I even doing this? Well, essentially, we all know why we are doing this. We're doing this to make some money. So the next question is, I don't understand the risk management. This is from Frank. Concerning the Apple trade, given Black Monday, just to let it ride without adjustments, the Apple trade. You mean this Apple trade? Well, in this particular case, well, because of the rolls, did we even have a roll? No, we just took some off. So when we placed the trade, and before Black Monday, we had made some profits. So we took half the contracts off, which means we were, you know, now we can lose only half of what we had put in. But again, the goal, now look at the delta over here. It is significantly positive, and for some strange reason, Apple is going down right now. So, I mean, normally if this was a real account with money, I mean, this particular trade, I was just showing my subscribers how we can trade all these different instruments. In a real account, yeah, by now I would have brought down my, not brought, I would have, where is the put? I would have done something like this. Probably on Black Monday, I would have, see my delta is 115, so I would have rolled this over and brought my delta down by about, 30 points. And then I would have done something else as well. I would have gone to where my break-even is, which is 98, but let's say 100. 100 is a nice round figure, might act as a strong support and or resistance. Or in this case, I'm saying, you know what if I were to just go to 105? Then I would go to 105 and add 5 more. And we have September and December, okay, 105. December, we'll turn our trade into something like this and bring our delta down to 28. And we will still not have exceeded our previous max margin. Because, you know, I mean, having lost enough money in various other ventures, risk management is essentially the main thing that I follow diligently and religiously, so to speak. But yeah, I agree with you. I mean, this was, you know, a demo trade, so to speak. So in real life, yeah, I would have got this down. I would have done this 105 put calendar quite a while back, or on Black Monday itself, had I had the time to look at all these demo trades, I would have done something like this. I would have bought back one short put, maybe right over here. Sure, I would have taken a small hit, but my delta would have been significantly negative, and then let it ride. And then once Apple starts moving back up again, sell that short put back. And remember, on days like Black Monday, or sometimes even on just big, fast down days, and it probably won't matter in Apple because Apple is so liquid. But in some of the other ones, like let's say LMT, trying to buy back a short put is probably the only thing that will work in a really fast-moving down market. Especially if you are trading the big indices like SPX and the RUT. Try doing a four-legged trade on Black Monday, you won't get filled. You will just sit there hoping, praying, cursing. So one good thing about calendar is that you can do this. In fact, I do the same thing in the Jeeps as well. I just buy back one of the short puts from the credit sites. And then when the market pops up and goes the other way, I sell it back. Make sense, Frank? And are we saying Teva, MMM, FLC, Polar Industries, and a few others for calendars, our weekly discussions? Those are the trades that we put on in the trading group 7 on Tuesdays. But if you want, we can have a quick look at it. Some of you, most of you might have seen this. Some of you might have not. So yeah, we can have a look at that. Actually, there was another thing. Remember, we talked about that. Maybe all those trades that we put in the paper money account for trading group 7, we should actually add it in Option View or Option Net Explorer as well, just so that we can keep track of what happened. Right now, we are keeping track literally based on our account value. We are saying, okay, this net leg is what? Every Tuesday we get together and say, oh, the net leg went up, the net leg went down, and that's about it. That's all we keep on doing. So here we have the same trade here, but slightly different. We just entered this trade very recently, I believe, on 825. In the middle of the carnage, we entered this trade. 824 was the big day down. We entered this trade when it was plus 60 percentile. And we haven't done anything yet. We just kept on. We just did a quadruple calendar strategy instead of a triple or a double. We said, let's go with 4. Why not? We want our Vegas to be positive. So it worked out great. Our delta was slightly negative. Apple is going down today. See, gamma is -7 because we have 4. And so right now, this actually looks like this over here. And we don't really have to do anything much. We just sit here, wait for it to hit one of the short strikes. So either until Apple comes to 100 or it goes back to 115 in the next 43 days, I don't have to do anything in this trade. And seriously, I will not do anything in this trade because, and since this is a Labor Day weekend special, I want to tell you one thing. The less labor that you put into your trades, the more money you make. Say it differently, it means that laziness is a virtue. So the less you do, in this case, I'm literally saying that until Apple moves down to 100 or it goes through 115, I am literally not going to touch this trade at all. And I will still end up making money. And after that, we have, well, this is October. Apple has weeklies, so we can keep on rolling the weeklies all the way until January. So the goal in this particular trade is by January to make hopefully 50%, maybe more. And it is definitely doable. In AFL, now AFL is not really a calendar. This is our stock replacement strategy where we said, let's buy something, 500, and actually when we bought this, it was even further away. It was like close to 580 days away or something, maybe even 600 days. And against that, we just keep on selling calls over and over and over again. And if you look at AFL since this day, which is 4715. So if you were to go over here and say, show me all the trades, or at least AFL, sorry, 4-7. 4 is April, yes. AFL, we have actually made $183 already on our $1,000 of margin requirements, which is not too bad. And Lord knows how much more we'll make by the time January 17 comes around. So AFL was the stock replacement strategy. Goldman was a calendar. We got assigned, and we are working on this. But yeah, by the time October ends, we will have made some. Or lost some, doesn't really matter. All in all, we will make money. Here we go. Here we have 140 and 155, and we are up by 9. When did we place this trade on? 728, 827, and then on 9-1 we added some more. And God, this looks ugly, doesn't it? In fact, I'm not even sure whether this is right or not. September 2. How far are we from September to 8 days? Yeah, it's 8 days away. So why is it looking like this? But it is. But we know how much we have made so far in IBM. Most of the time in IBM, if you look at IBM, I believe this is our first trade in IBM. We have not made any other trades. See, I was jonesing to even put on an IBM trade, even in a paper money account. And then I did. This was back to our long-term stock replacement strategy. So we are just sitting there. The stock just got called away, so we are selling puts against it. And against this January 55 call, we'll keep on selling calls. And this will continue. This trade will just literally continue all the way until Jan 77. Unless if I just get bored and say, let's do something else, which we have done quite a few times. This is MEE, which is a stock that I never heard of until somebody from my group said, hey, let's try this. And I'm like, yeah, let's do it. And so far, we are doing rather good. We are down to, we sold this for $2.75. We are down to 12 cents. So we still have 15 days. So what we will do is we will roll this down. By the way, this thing does not have weeklies. So we are making 35 more cents. This time it got filled as well. So as you can see, I just rolled this 105 down to 100, took in a credit, reduced my delta a little bit, or it's now essentially delta neutral, and that's about it, right? If it's delta neutral, I don't really have to worry too much about which way the damn thing is going to go or not go. So NE sitting there doing this thing, PII, this was, what was it? This was Polaris Industries. Yes, this thing just keeps on moving up and down big time. Now, this is also one of those underlyings where trying to get filled is a pain in the neck. So if you want to do this, be very careful. Don't do it with too many contracts. You just won't get filled. And this also does not have weeklies. You see September to October to December, so it's even missing a month somewhere in the middle. MEE was MEE. No, this is not MEE. This is NEE. N for N for Nancy. Not M for Maryland. Maryland. No problems. So here we have the rut. We're doing something here. Yeah, this is a very, very long-term bearish butterfly all the way in November. We put this 10, 15, 20 days ago. No, this Tuesday. Okay. SPX is the same thing. We are trying different things. This is a paper money account. That's what we do. All of us get together on Tuesdays at 2 p.m. Eastern, and we all say, yeah, let's try this trade. Let's see whether this trade works in this market or not. And we try all this different stuff and see which one works the best. And then we all decide that, hey, this is a good trade to do. Now, here's another trade. This was a calendar. This is our long-term hedge calendar against the entire portfolio. So on Black Monday, I just bought back the short puts, took in a significant hit, but then this thing went down, way down, literally. I think SPY was down all the way to 191 something. So this guy is sitting there making money. He spent $10, it's up to 14, so we are up by 40% in how many days? From 417. This trade has been going on since 417. This is our hedge against the market trade. Teva is sitting there doing its thing. We decided to do two separate things. We put on a butterfly in Teva because of some news, I believe. It was Teva is trying to take over some other pharmaceutical firm. I have forgotten what it was. So this trade now, we have ended up actually owning a 300 shares. So now this could very well be a perpetual trade as well, because I'll just keep on selling calls against it until it gets called away. And then I will start all over again. And here we had a Tesla trade that we started also right before this whole carnage thing began on 7/7 is when we started the trade. And we have 4 calendars here as well, 265, 250, 240, and 225. All we are doing is just rolling it every week. And right now, Tesla looks like this. Well, you don't really need to see the bottom part. This is how it looks, and we will continue to roll. I don't know how much we have made in this trade so far. Tesla, we are up by $3,971 on a margin of $3,000. Now, that is the margin because part of those might have been what is called, have become calendars. 280 to 250. This is a 30-point wide calendar, which is why, sorry, a diagonal, which is why we are showing a margin. But our total debit in the trade was about $5,200 since 7/7 to 8/7 to now very soon 9/7. So in 60 days on 5K or $5,200, we have made $1,880, which is the open PL, plus we have made other money from the rolls. So we are up to about $2,500 total in this, which would be close to about 50% of our debit in this particular trade. And then, of course, we have some trades here, which are our very, very, very long-term trades, where it's the stock replacement strategies, and so it's sitting there. This was one of our better stock replacement strategies, where the stock got called away, and then the market dropped like a rock. So we made, it got called away at a price of 204. Now it's at 195. Still going down, making us money. Of course, our margin is like way up now because of this short 600. But we have a 194.5 put that we are selling against our short. So hopefully we will get assigned. The stock will be put to us. We will make money on the stock. We will make money on the short put. And we will continue to make money on the long calls and the short calls until Jan 16. So, these are trades, these are literally trades that I look at only on Tuesdays at 2 p.m. to 3 p.m. I don't even look at these accounts, both of these accounts, Now, on Black Monday, we went from, our Netlick went from 508 down to 474. And now we are back to 512. Without doing anything. Just, it's like once a week we get together, we say, hey, let's do this, let's not do this, whatever the case may be, and we have a blast. So here's another question from Reza. The Amazon triple trade 2 days ago. Is it safe to place this trade in a live account today? I believe so, yes. Hold on. Amazon. Did we put it over here or did we put it in one of these? Oh yeah, we put a trade over here, correct. I think we put it over here recently. Yeah, 9-1. We put this trade over here. This is a triple calendar. 508 is the current price. 480, 500, 520. As you can see, the 500 put is 10 contracts, which is where the price was when we placed this. So we have a middle calendar that has a higher number of contracts just to so to answer your question, Reza, yes, it is this trade is worth putting on right now, but you might want to change it slightly. So this middle part, let it be 510. Let this be 490 and let this be 530. In other words, the middle of the calendar will be 510, which is the closest to wherever Amazon is right now, and 20 points above and 20 points below. And if your delta is slightly negative, don't worry about it too much because Amazon is going down. So now again, remember, we have 10 calendars, 5 and 5, so total of 20 calendars. Even for 20 calendars contracts, we only have a delta of -7. But I think when we put this trade on, I think our delta was a plus 47 something over the entire trade because remember, by default, I prefer my deltas to be positive in my calendars. As you can see, every single delta is positive, and every single one of these is a calendar, except for this guy here. In Costco, we are now literally holding. This is going to be a very interesting trade, which we will know how it worked out in another 505 days. But in real life, of course, we would not trade this way. But we are doing our thing. A lot of these are just standard. This was Mukesh is here. This was our EEM calendar. Look, this is EEM. The price is only 33. We have only 5 calendars and not 15 like Amazon. But look at our gamma, -30, and this gamma is only -8. So here I have only 10 contracts. In Amazon, I have 10, 15, and 20. You see that? So be very careful as to what you put a calendar on. And most of these, like ETN is 55, see, but the gamma is -48. This is only 5 contracts. And this is down to 10 cents, so we might as well as just roll it over. We are getting 22. I don't want 22. I need at least 30. So we will convert it into a diagonal and roll. FDX, we have the stock. Hopefully a lot of people will send gifts to everybody else over Christmas. It'll go up, we'll make money. If not, it'll get called away, and we will continue to make money in a slightly different. Same thing with Google. We have a very long-term calendar here, Jan 17th. We put the 500 put and we keep on selling and add the money calls against it. And we have more or less recovered all our losses that we have made. And hopefully Google will come down big time. Same thing with Goldman here. Illumina, I already showed you. Look at Microsoft here. The gamma is -40. Now, just to show you, remember we said the price of the underlying. This is a $2.88 stock. And look at the gamma, -1,050. We just put it on, and we have made quite a bit of money in Orex since when did we start this trade? 9/11/14. Let me show you Oryx. This is 4/7 in Oryx. This year we are down $300 because a couple of times I think Oryx actually went up big time on earnings or went down big time on earnings. No, I think it went up. It went to $5 or something. So we lost some money over there. But we have until Jan 16. We will recoup quite a bit of those losses. And yeah, we have a Tesla here, another very, very long-term call that we started a long time ago, 7/24/14, literally a year ago we started this trade. We keep on selling against it, selling against it, selling against it. It's fun. You don't have to do anything. We just meet once a week and say, hey, let's sell. Then we go into other things. And doing this actually is helping all of us because we find out certain underlyings that are just not worth it. I found some myself, but here I'm finding quite a few more, like this PII, Polaris Industries. Avoid it at all costs because trying to get filled on that thing is a pain in the neck. So we just put this new trades just recently, while in the middle of this carnage, or right before we put this trade on. This is Celgene, a long-term double. This is Biogen. And this, remember, this is the industry that people say that we should avoid, the biotech industry. And I'm like, why avoid it? It moves around so much. It is highly, very volatile. Let's just use that underlying property and make money. So this is another one. Then Bed Bath & Beyond is the third one that we've been doing. Look at this. The gamma is minus 29, 2 contracts each. In BIB, we only have one, so you would expect the gamma to be, say, 15, but it's only minus 1.66 because the price is 303 and here the price is 62. Same thing with Celgene. Price is 118, so the gamma is slightly higher than this, lower than this. So this is how calendars perform in bad environments or bad neighborhoods. It's like, being a ninja and not having to worry about bad neighborhoods at all. In fact, the people in the bad neighborhoods might have to worry if you show up over there.
So did you see any difference? Yeah, did you see any difference with your wealth calendars versus your income calendars with recent moves, or did they behave similarly?
During the recent the recent carnage over the last 2 weeks, the income calendars have done significantly better, but that is to be expected because of because of the adjustments that we do. The wealth calendar is, just as we, it's called the wealth calendar because we actually try to do as little as possible with it. Our main goal is to not lose money in wealth calendars. It is literally Warren Buffett's adage of, don't lose your capital. And point number 2 is do not forget point number 1. So wealth calendars take time because we start 60, 70 days out to expiration. So they take time, but we also need to give it more room. So because of this huge down move, the wealth calendars are currently underwater, but by the time October expiration comes and a couple of rolls happen, we will be back in black.
Okay. Are you using similar underlyings from income versus your wealth?
I do most of my wealth calendars in the indices, like
okay.
SPX. I do in my personal accounts. I also do wealth calendars in some stocks that I like. Say Apple is a stock that we know is not going to go down to 0. IBM actually might, but Apple probably won't. Google is another one that probably won't. Then we have stocks like the defensive stocks like J&J, Procter & Gamble. BRKB is definitely tradable. In fact, I've done a lot of butterflies and trades calendars in BRKB. In fact, BRKB, when it was at around, I think now BRKB is down a little bit. But there was a time when BRKB was close to, now it is back to 132, but I think it went all the way down to $74, somewhere near 2000. And getting fills was a pain in the neck. But now, I mean, this is Berkshire Hathaway. We know that this stock isn't going to go down to zero either. At least we hope it won't. So this actually would also make a great wealth calendar. Essentially, a wealth calendar would more or less be like a covered call kind of strategy, where you buy the stock and you keep on selling calls against it. The only problem is that when there is a $500 stock, you can, when people can buy 1,000 shares, but it's much easier to just buy 10 calls. And since these are out of the money calls, they are even cheaper than at the money calls. And usually it is a great idea to buy them on down days, not really down days like the Black Monday, because remember, when the walls go up, the prices of long-term calls also go up, right? Because it's a pure Vega trade, having a long-term call or a put. So, but on regular down days is a great time to buy a long-term call out of the money. Consider it like a proxy to having 1,000 shares of the underlying, and then just keep on selling calls against it. One very simple way of building wealth. There is another even simpler way, but a lot of people tend to, TOS will let you do it, IB, meaning interactive brokers will let you do it, but most others won't let you do it, which is just to sell puts. I mean, I sell puts in QQQ at the money puts all the time. Literally, just sell a couple of puts. The worst thing that will happen is that you will be assigned. But before that happens, let's say QQQ is at, say, 103.72, right? So you just go to like something 43 days out and sell the 103 put. So you're getting $3.49. Just sell one. And now if the Qs come down and touch our strike of 103, just roll it further out and further down. In fact, let's just put this on right now. Now, if you want to see how that trade works out, you guys will have to show up on Tuesdays at 2 p.m. That's when the trading group 7 actually takes place. It's fun. We have a real blast most of the times. We have a good time. We have an even better time when Ralph and Dick show up, which lately they haven't been doing. Anyway, so essentially, this is what I wanted to show you. We know, and I have proven it to most of you or some of you, that when the market is going up, your calendars, you can make money in calendars. But this was to show you that when the market drops like a rock, you can still make a lot of money in calendars. So if you want to learn more, just join up on Trading Group 7's on Tuesdays. If you want to actually make money with this, sign up for the service. For some of you who are new, meaning haven't been here before, you can feel free to talk to some people who are already subscribers. And Dan, I promise that I will put in the buy to close or sell to close or buy to open or sell to open from now on in my emails and the trade alerts. Dan is he's used to the old-fashioned way of BTC and STC, so but it is a good thing which I should really implement. So as of now, I promise that I will. Okay, Mukesh is saying, I agree wholeheartedly with you about Group 7, and I thank you very much for doing this. You are very welcome, Mukesh. It is my pleasure. I have a lot of fun doing it. We all have a lot of fun doing it. And it's great to see the net lick in our accounts keep on going up. We literally, I mean, I know a couple of people who are not part of capital discussions or any other groups that I know of. I just know them personally. They are in New York City, and they settled on good old short-term iron butterflies, and they got killed. I mean, they got seriously killed. When I told them that I was up in my account, they couldn't believe me. They were like, you are lying. I'm like, I'll send you my brokerage statements if you want. Thank you very much, Mukesh. Mukesh is saying, I'm great. Well, I know that, Mukesh. But it's good to know and hear it from other folks too. I'm just kidding. We are all great. And you are right. Actually, this people think that calendars are a complex strategy, but actually I find it to be a whole lot less complex than broken wing condors and broken wing butterflies, even though I do those strategies as well. I somehow find calendars to be the most forgiving of all trades. These are trades that I can leave on when I am going on a vacation. Because remember, I just have to, on a vacation, there are times when I will have my laptop or my my iPad or something, and just look at them positioned like every other day. And sometimes, even though I have reached an adjustment point, I'm like, you know what, I'll adjust once I get back home. Still okay. Well, that's true, Reza. Maybe that's why they do call me the calendar king. But again, that was a moniker given to me by John Sarkett. I don't consider myself a king. Remember, king means having control. My goal is not to have control over other things. My goal is to have control over the emotional content within me. And calendars actually help to keep my emotional content, shall we call slightly delta positive at all times? Literally. Because I know that I'm okay. I don't have to worry too much. You just sit there and keep on doing them. In fact, Marcy actually sent me this email. This is the nurse in Colorado that I mentioned earlier. She's like, I think this is all I'm going to do from now on. She's the one who just made 42% in LMT in 27 days. Didn't even have to adjust in the middle of the big crash. Even though LMT dropped by $7.92 and then moved back up by $4, she was perfectly fine. Brad is saying, I'm still trying to learn to love them. Brad, let me quote one of the greatest philosophers of all time. Just do, no try. I believe that was Yoda. In a very far off planet, I forget the system now. The Dagobah system. He was in the Dagobah system when he told Luke Skywalker that. But again, I agree with you. One has to try first. There was a time when I would never do an iron condor because every time I did it, I would get killed on one side and adjust it and then killed on the other side too. Because I started doing condors in 2008. Not a good time to start doing condors. So actually it was in 2008 when I seriously decided that I think I'm never going to trade anything else except calendars. Even though I was learning all these different trades like double diagonals and condors, butterflies, iron butterflies, ratio trades. But then after 2009, the market just kept on moving up and up and up and up and up and up. And I'm like, well, maybe it might be a good time to try all these things. So I did try them. They did work. The Jeep that you and Regio and all these guys, and then Harvey, we used to call it the weirdo, asymmetrical condor. I mean, those were really, really nice trades, very resilient trades. And it was only after doing the Jeeps and those iron butterflies like Kevlars that I sort of got to know the intricacies of the Greeks much better. Prior to that, I was like, screw the Greeks. I'm doing calendars. I don't need to see the Greeks. In fact, I did calendars for 5 years without knowing anything about it. In fact, I didn't even know that there is something called the Greeks when you trade options. So Jim is saying, for a new subscriber, when will you be placing the first trade that we can enter as a new trade? This is going to happen over the next probably week or two. So what today is Thursday, right? Today is Thursday. If I'm not mistaken. I keep on confusing between Tuesdays and Thursdays when we meet. So yeah, I would say, before the 18th of this month, we probably will have a trade on. I am just waiting. Also remember, by the way, this is good. Also remember that October is an earnings month. So we will try and put one of those things over there. That's the only time that I trade Netflix, by the way, during earnings month. But lately what has happened with Netflix is that after that big 7-by-1 stock split, they've got some weird strikes, like strikes at, 36.75 and 79.83 and stuff like that. So it's very difficult to put on a long-term trade in Netflix when you have some strikes in the front month but none in the back month. See? So it seems to have 97.86, 102.14. October seems to be straightening out. That means probably the longer-term ones have also straightened out. Okay, that's good. So yeah, Netflix might well be the one. But yeah, we will stick to the standard ones. We have the RUT, we have the SPX, SPXPN. So far, we have not done a trade in NDX because NDX actually, it's pretty bloody expensive if you want a trade with 4 months in between your long and your short. But we have Apple, Amazon, Caterpillar, Tesla, IBM, Goldman Sachs, and there was something else. What else? LMP. And then we have this. I always have, or I have done a lot of trades in Celgene as well. So maybe Celgene will be another one. But yeah, we will be putting on quite a few trades over the next couple of weeks. I'm hoping that the market will go down first. It's great to put on a calendar in a high vol environment and everybody looking at you and saying, you are an idiot. And it's even more fun looking back at them and saying, no, I'm not an idiot. I'm crazy, but I'm not an idiot. And then the calendars make money. And people think that I'm showing them something different. I mean, I've shown people my live accounts. I'm saying, here, look, man, this is my live account. They're like, no, I don't believe you. This can't happen. You should be losing money on calendars when the market goes up. And I'm like, really? Why? Anyway, so hopefully you guys learned something. Hopefully you guys will join up on Trading Group 7 on Tuesdays, learn some more. If you have some variations that you want to discuss, we can do that during those times. If you want to make money with calendars, feel free to join the subscription. Some more trades are coming. As I said, we have the income trades and the wealth trades. And if you join both, then you get a significant discount for the second one, like almost 50% off. And yeah, let's all get together and make money. So any questions before? What is the link to the trading room? The link to the trading room, Andrew, you should actually be, it goes out to everybody out there. Tom, if you are here, can you answer this question? Tom may not be here actually. He's in Germany. But I will make sure that everybody gets the link. Just as I had to call Tom today and say, hey, send this link out for today's webinar to everybody so that, everybody can at least know and have some hope that in really bad times, you can still walk away with a positive P&L in certain rates. So yes, I will ask him to send it out to all of you, meaning, the entire subscriber base of Capital Discussions, not just, I think there must be a way somewhere that you can just join. I think on Tuesdays, if you just go to Capital Discussions and click on the calendar menu item, you can just look at the, it will say Trading Group 7, and within the first, you're right, half an hour prior to that, it will say join, and you can click on that link to join, and there you are. Which is good in a way, because that way, in case something happens to the email and you can't get, and even Tom does send an email but it doesn't reach you, then this way, you know, the onus is on you to log into Capital Discussions, go to the calendar menu item, and click on join. So are there any other questions before we adjourn and start celebrating the Labor Day weekend? Remember, my entire reason to give you this Labor Day special is to let you know, without any controversies of any kind, that labor is too overrated. The less work that you do, the more money you will make. So, you know, the Labor Day weekend is coming. Try to not do too much, except maybe, you know, have fun. So, do you think these techniques are applicable to the futures options calendars? Yes, indeed, they are. The only problem with futures is that when the future contract itself changes, the brokerage firm will not consider it a calendar, because now you have a December call, which is part of the December futures contract, and you may have an August short call, which is part of the September futures contract. So the brokerage firm will say these are two separate, it's a pairs trade of sorts, but it is not a calendar. But because of the span margin and everything, your overall margin will still remain the same. But you have to be very careful. But if you are used to futures, it shouldn't really be much of a problem. That is correct, Brad. Trading Group 7 is at 2 p.m. Eastern Time on Tuesdays. Correct. Next September, the next one is on September 8th, right after the Labor Day weekend. Yeah, I agree. It is a great strategy. Make more with less work. I mean, I bet you, you know, guys like, you know, Warren Buffett and Bill Gates and Richard Branson, they don't slog their butt off every day. They are having fun. Every now and then they will say, well, let me look at my portfolio. That's how life is supposed to be. No need to sit there glued to the machine, and now everything is red, except for the Dow. And the good Lord works in mysterious ways. See, we are down to 16. My delta is extremely positive. Maybe I'll just buy one back here and run it down to 8. Or maybe I'll do something else. Who knows? All right, guys, it's 2 o'clock. I've been talking for an hour and 45 minutes. It doesn't feel like that, though. It felt like 10 minutes. But it was good. I'm glad you guys enjoyed. Thank you again, Mukesh, for your kind words. And I hope all of you at least join up the Trading Group 7. You will learn a whole lot more. And again, we don't just do calendars, okay? Brad is there sometimes, Tom is there sometimes. We put on broken wing condors, we put on the Jeeps, we put on Kevlars, we put on many different kinds of trades. And, you know, generally try to get our net leak up. So the net leak, the goal for us by January expiration, so which means by 31st of December, our goal is to get this thing up to $600,000. From 511 to 6,000, so around $89,000 over the next 4 months, 5 months, September, October, November, and the 4 months. It is doable. And strangely enough, in this paper money account, everything is not red. But in the live account, everything is red. Well, okay, this is back up to 15. Okay, good. Very good, folks. I shall see you all next Tuesday. And if you do end up becoming subscribers, then we have this meeting for about 45 minutes to an hour every Thursday at 12:15, where I go over what we are doing, where we are going to adjust, why we are going to adjust, whether we should even adjust or not, and all the rest of the stuff that we option traders obsess about. So, thank you, Red. That's right. There's no market on Monday. Turn off the machine Friday evening, and actually shouldn't Friday also be half day? Usually before a long weekend, the markets are half days, maybe only on the big ones like Thanksgiving and Christmas. Well, I think I will be very happy if tomorrow is a Friday in the markets. Half day, that is. It is Friday in the markets, but hopefully it's half day too. Thank you very much, Damien. Thank you, all of you, for showing up and listening to me for an hour and 45 minutes. It just shows it gives me a warm feeling inside to know that there are people crazier than I am on the face of this planet. And you, OD, are that few. So I will see you again Tuesday and or Thursday, or maybe even more. Later, guys. Have fun. Have a very nice weekend. Don't drink and drive and all the rest of that stuff. Back step.